This is Alan Bush with ADMIS. In the stock index futures, we are seeing prices mixed to a little bit lower. We did get a very big surprise as far as the jobless claims report coming in quite a bit lower than expected. However, this was basically because two states did not report, one large state and one small state. The actual names were not reported. So even though at first glance the big decline in jobless claims looked to be an improvement as far as the economic outlook is concerned, it's because of these two states that did not report because of computer problems. Also, it looks like analysts are likely to be looking more and more at the Fed and their meeting coming up next week. Now, next week it's the 17th and 18th FOMC meeting. The consensus view remains that the Fed will taper their quantitative easing program by $10 billion from $85 billion per month down to $75 billion per month. So I think the tapering influence is likely to dominate between now and then. So I would look for easier prices, some pressure developing in stock index futures ahead of that Fed policy meeting. Over in the currencies, seeing the euro currency under some pressure, factory output falling more than expected. In fact, it was a rather large surprise to come in as weak as it did. So the euro adversely affected by that report. Also, we have the Japanese yen trading higher, even though we did have Japanese machinery orders coming in better than expected. The biggest mover, although overnight, was the Australian dollar, sharply lower. This after the employment numbers in Australia showing a sizable decline when many analysts were expecting a large increase. So a big miss on the Australian employment numbers, taking the Aussie dollar sharply lower. Over in the credit markets, we are seeing futures a little bit better. Yesterday's Treasury note auction went rather well, as was the previous 3-year note auction. However, today we have the 30-year bonds to be sold by the Treasury. Also, we are getting close to some resistance in the September 30-year bond in the September contract, just under 132. Don't forget, we have a double bottom that comes in around the 129.25 level, which I believe is probably attracting sell stops from a technical point of view. So we feel that this market is headed lower for fundamental and technical reasons. And I do think these possible stops that are under this double low will be taken out within the next couple of weeks. Our long-term outlook on treasuries remains bearish. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.